So very welcome everybody to this AHK webinar together with MBU. We are very happy to have Deputy Governor Volodymyr Lepushynskyi as our guest, who will present a bit about the macroeconomic and policy outlook, recent developments in the economy, labor market, inflation, and a bit on the outlook on the future as well. During the webinar, I would just say that we take the questions after the presentation of the Deputy Governor. So please either write your questions in the chat or raise your hand and you will be given a word after the presentation. Just very short, brief presentation of Volodymyr Lepushynskyi. He has been very long time with MBU. He joined them in 2004 and also took a PhD in economics. He held several different positions in the central bank. Between 2008 and 2014, he had various positions in the Division and Office of Monetary Policy Department. 2015 to 2019, he was a Deputy Director of the Monetary Policy and Economic Analysis Department. After that, he was 6 years heading the Monetary Policy and Economic Analysis Department. And since December 2025, he is the Deputy Governor of MBU. So very welcome, Volodymyr, and we are very much looking forward to your presentation. And I will leave the word to you. Please go ahead.
Thank you, Christian. Hello, everybody. I will briefly comment on how economy of Ukraine performs and what are current asks of the National Bank of Ukraine in terms of monetary policy. While speaking on the Ukrainian economy, we need to remember that actually the losses caused by the war are continue to mount. So the mass migration is causing imbalances on the labor market, and we are feeling it quite significantly. So there is the number one problem which enterprises are mentioning is a lack of professionals, and they are not able to hire as much employees as they need. So in terms of mass migration, the wave actually which we seen in the 2022, it's moderated. Last year, about 300,000 people left the country. Our assumption for this year is that another 200,000 will leave Ukraine, but what we are seeing from the beginning of the year actually is there is some decline of registered refugees abroad, but currently we see is that only as a seasonal factor, and our expectation is that people will start to return after the security risks will be lower. And of course, we lost territory. We are still losing capital because currently in the winter season, actually Russian strikes were aimed on energy infrastructure. Now they're mostly hitting the logistics and industrial base. And like estimated, recovery and reconstruction needs are increasing. So in terms of sectoral change, what we observed is actually we have lower capacity in all of the sectors, and there is only one exception, is public administration and defense, and the sector is increasing its capacity dramatically. It is not yet seen on the overall GDP figures because the share of this sector is still not quite big, but the growth is quite impressive. And our traditional sectors, which we relied in terms of export, is of course agriculture, and but still it's below the level which was seen in 2021, because we lost actually the territories, and seeding capacity is still below the pre-war level. And of course, in territorial in terms of territorial, how we see the growth and economic activity across the regions. We had a special box in our inflation report where we research how different regions are performing, and there is no surprise that economic activity across regions is not determined by traditional economic factors, but by geography. The closer the region is to the front lines and Russian means of destruction, the greater impact of war it suffers. And a lot of activities actually were relocated, and we're seeing this trend now to the west of Ukraine. And West Ukraine, of course, performs differently from what we are seeing on the east of Ukraine. And this asymmetry may become entrenched in the form of depressed clusters. And currently, our outlook for the economic growth, the economic recovery will continue, but of course it will be held back by effects of war, like low capacity in terms of labor, in capital, and of course we can rely on total factor of productivity, but in the moderate scenario we will still be below the level that we had prior to the war on the forecast horizon. Of course, we do not exclude the scenarios of rapid recovery with sufficient investment. We could see completely different picture, but our view remains. We're trying to be moderate in our forecast. If we are talking about the this year, actually, in the first quarter, there was decline in GDP, 0.6%, but it was like short-term effects of deficit of electricity, and we expect, and what we are seeing from the high-frequency economic indicators, that growth started to recover in Q2. And our forecast for Q2 is 1.7 GDP growth. It could be still lower because current assessment, what we are seeing is 1.5. But overall, we will have the growth overall during this year. So. But of course, the effects of high uncertainty and damages to the infrastructure are visible. Despite the war, we are acting as inflation targeting central bank, and despite of the shocks, they are quite persistent. We are able to keep inflation expectations under control, and it's very vital for us. We see the price stability as our priority, and despite the war, inflation is under control. We had achieved quite significant disinflation after the first shock of war, when we had inflation of 26% in 2022, but we were able to meet inflation target of 5% next year in 2023. Then several shocks occurred that accelerated inflation, that were mainly supply shocks, which caused by bad harvest. We still have quite significant share of our consumer basket is food, and of course we are vulnerable to such type of shocks. But inflation were on quite good trajectory of downward trajectory until the Middle East war, and that completely changed the perspective, and of course it has inflationary effects. We assess like direct effects of higher oil and gas prices at about 1.5 percentage points to inflation, and of course it affected both like current inflation and perception of inflation, and we were that actually this development stopped us from continue an easing cycle of key policy rate. So our final goal is to gradually move to the full-fledged inflation targeting with floating exchange rate when the proper conditions are in place. Currently, our regime, we call it flexible inflation targeting, and we are like it's the main difference from the regime, inflation targeting regime that we had prior to the full-scale invasion, is that we are quite actively participating in the FX market. We are not using only the key policy rate as a main instrument, but rather the policy mix of FX interventions, capital controls, and of course key policy rate. We are moving along this roadmap. We are currently we shifted from exchange rate stability to manage flexibility of exchange rate. We are moving with our FX and capital liberalization. We currently, how we assess it, we are on stage 2 of this liberalization, and we are preparing ourselves to continue with these efforts. So, of course, in this environment, we are calling our policy toolkit as quite unorthodox. We are using the combination of monetary policy instruments, rather relying mostly on one instrument. So currently we are, how we call it, we are on the stage of the on the way to the victory. We are able to perform but despite that we are using these unorthodox measures, we are adhere to the price stability as any other normal central bank. So currently we are using this regime of managed flexibility. We allow the exchange rate to move in both directions, and mainly this dynamics is caused by the supply and demand on FX market. Exchange rate is volatile, and we are moving to this greater exchange rate flexibility and doing it in stages. But like what is unusual in our regime is that we still using our FX interventions to both like allowing exchange rate to react to the market forces, but at the same time to keep control over expectations, because without the participation of the national bank on the FX market, exchange rate could not like balance market itself. There is still a need for the national bank to participate in it, and I explained the logic behind this regime. So currently we have a wide budget deficit, and it's mainly covered by our international financing aid and by activity of the Ministry of Finance on the domestic debt market. So, of course, to cover this, it's impossible for the economy to cover such large fiscal deficit due to the war. But we have this quite sufficient international financing, which covers our current account deficit, which is caused by large fiscal spending. We assess this like if we took the broad basic balance and we treat this international financial assistance as a solid and durable source of financing, because it's not a matter of charity, it's rather a compensation for Ukraine for providing the security services to the rest of the democratic world. And we think this financing is quite durable, and we are able at the same time, we have this, let's say, surplus of effects in the public sector, but at the same time we have deficit in the private sector, which caused by large fiscal spending. So we, as a central bank, we are covering this structural deficit of the private sector, and at the same time we are able to accumulate international reserves. There was some like delays in financing since the beginning of the year, but overall we think on the forecast horizon our international reserves will increase. Even for this month we expect additional 13 billions of financial inflows in the public sector, and our amount of reserves will be increasing. And they're on the level adequate to the by the methodology of IMF. They are covering 100% of this adequacy ratio. So by accumulating international reserves, we treat this as we are not accumulating any imbalances in the economy, despite the fact that the economy itself is quite imbalanced due to the large fiscal spending. So our how I explained it, we are channeling this FX surplus in the public sector to cover the deficit of the private sector while accumulating reserves. So our amount of interventions is quite volatile and caused by different factors, like some we increased the amount of intervention, for example, in March, due to the effects of the war in the Middle East, but at the same time, our amount of interventions decreased after the initial shock in April and May we sell less of that. What is important is that there were no signs of imbalance on the market. Expectations are manageable, and we didn't see increase in demand from households, except for March, because there was some nervousness on the market. Currently, we have high demand on the FX market, and the main reason for that is intensification of fiscal spending. But at the same time, exchange rate moves in both directions. We are trying to achieve this, how it's called, constructive ambiguity on the FX market when there is no certainty where exchange rate will go in the future, and that's actually how flexible exchange rate regime should work. Our policy mix, one of the tasks is to maintain the attractiveness of hryvnia savings instruments, because despite of the war, hryvnia is actually performing quite good, and as money, hryvnia is completely performing all the functions of money. So it's still the means, the main mean of payments and savings. We are how we are trying to manage this savings. It's actually by keeping our monetary policy sufficiently tight. There is quite high rates on hryvnia instruments for savings, on government securities, and on hryvnia deposits, these instruments are able to cover any expected inflation. So this policy had an effect because there is strong demand from households for deposits and for domestic debt securities in hryvnia, and it seems that households, there is structural shift. Because of some infrastructure improvements, households are able and are actually doing the savings in domestic debt securities, and the amount of their portfolio increased sixfold during since the beginning of the full-scale invasion, and there was a structural change due to our let's say unconventional policy measures, that the share of term deposits in overall portfolio of deposits of households, the trend changed. It was on mostly downward until 2023, and then we changed our policy, and actually we had quite significant increase in this share. So banking sector remains liquid and profitable, but of course the hiked income tax on banks, which reintroduced every year, unfortunately, it has its effects on the sector. Despite the war, banks are complying with prudential normatives, and NPL ratio declines dramatically, and currently it's on historically low levels. So despite the war, we had quite rapid growth in loans. It's widespread on the all the sectors like retail loans, corporate sector, and for 2 consecutive years, the rate of increase is about 30%, quite impressive dynamics. And what is important, actually, the banks are providing loans even on territories which are affected by the war as well. So that activity is helping the economy to recover, and we see that we think this dynamics will continue, and that's quite significant contribution to the economic recovery, how we see it. So, of course, we observing quite significant risks, and the main risk is war itself. Of course, there is always a possibility of further escalation of hostilities, additional destruction of production capacity, logistics. There is additional risks which related to the war, is additional needs for higher spending. For this and the next year, we think the budgetary needs are covered, but there is always a possibility of higher needs, especially for defense sector. We currently see that there is no additional pressure in terms of migration, but it's always remains a risk due to the war developments. We think that on the forecast horizon, there is high probability of adjustments in regulated prices, because most of them were not increased due to since the beginning of the full-scale invasion, but there is always a possibility for adjustment because these financial imbalances in some sectors are accumulating, but it could be an additional source of inflationary pressure on forecast horizon. We in doing our forecasts, we are trying to have some moderate assumptions about the financing of reconstruction efforts, but there is always a possibility for faster and more massive reconstruction, and that, of course, will change the pace of economic growth dramatically. But we are trying to be moderate and conservative in our forecasts, but we are not excluding the possibilities of faster development of the economy. So that's all from my side. It took me half an hour as planned, so I'll be happy to answer your questions.
Thank you very much, Volodymyr. I think everybody is quite grateful and impressed by the work that has been done by the central bank during the war, because the situation, I think, is quite it's quite good, taking all the circumstances into consideration, so to say. We have a few questions. I have a few questions, but first I see some in the chat as well. One from Liliana Gero, who asks, if we look at the reconstruction activities goals, what could be, in your distinguished opinion, the key sectors that the international actors should focus on to ensure rapid economic recovery across Ukraine?
Yeah, thanks. Very good question, actually. Of course, what is the rapidly growing sector is milk tech, and I think it's quite prospective sector. Despite the, the world is becoming a less safe place to live, but at the same time, it's opportunity for the defense sector. I think it will continue to grow even after the active phase of war. I think what is most traditional and one of the key sectors in Ukrainian economy is agriculture. It's performing quite good in terms of exports, but I think there is still room to increase the capacity of the sector. With additional investment, I think we have plenty of room for the development. Of course, what is one of the sectors which has quite significant perspective is the financial sector, and we're absorbing some interest from big international investors because there will be a privatization of banks because we have such a large state-owned sector, and there is the need it to be privatized. And of course, with such wide significant profitability, we think it's quite prospective. Like, of course, I need to mention like construction industry as well. There will be there is and there will be a need for not just rebuild what was damaged, but I think the concept of building back better is quite useful, and I think the construction industry will prosper as well.
I have some follow-up questions there. One regarding the privatization of banks, because I have been here quite a long time, since 2008, and this discussion has been before, if I might say so, and not so much has happened, to be honest. Do you feel more confident now? But I know it's not you, it's Ministry of Finance who owns this bank, so I should say that also. I mean, it's not the central bank, but it seems like maybe the chances are a little bit higher now because there is more banks to choose between as well to privatize. So you feel relatively confident that is going to happen, or?
Yes, I am. I think we have like both the determination from the state to privatize these banks, and what I seen like is the interest from international community actually to buy something which is in financial sector which is quite profitable, and there is quite good prospects of this sector to grow, because currently we like our size of the financial sector is not sufficient actually for to support the strong recovery of Ukraine. We need larger sector, and it will grow.
I agree with that. I mean, I see a little bit of a risk that Ministry of Finance might think that we will get a much better price after the war for these banks, and therefore maybe delay the process a bit. I don't know. It's just my own reflection on that.
Yeah, but you know, the prospects of for development you could not predict it, but there is actually the need for investment in this sector, and I think the government is actually wants to move faster in this direction.
Good, thank you. Another question related to this was also, you had a slide, already slide number 3, that showed the structure of Ukraine's economy, how this has changed since the war. And one thing that surprised me a little bit was it's clear that the public administration and defense has increased a lot, but IT had decreased by 7.3. It shows in the graph there. I would have thought that IT, I mean, a lot of this could be done also from people sitting abroad, I mean, still working for Ukrainian companies, etc. Is it so that it has actually decreased, or do you think that it could be that some of this IT has moved to defense, so to say, because it's very defense tech, high-tech development?
Yeah, you're absolutely right. That actually is a combination of factors. One is, of course, actually it's contributing from IT to defense sector because it's quite technological. And people like good programmers are working with programming drones and so on. But of course, we lost quite significant quantity of qualified labor, which moved abroad, and that's a quite massive factor which contributed to this negative developments.
Yeah, thank you. There is another one in the chat from Jakob Ruck that says, which areas within Ukraine's security and defense sector are currently most conducive to SME participation, including dual-use innovation? Where should SMEs, especially international and German ones, focus when entering the market? And what practical guidance would you offer to help them navigate regulatory, financial, and partnership challenges? That's quite a wide question.
Yeah.
Comment of that.
I think like I'm not an entrepreneur, so it's difficult for me to say. It's like it's market-driven forces, like because there is high demand for this miltech production. It's very competitive environment, so there are a lot of firms. It's not some kind of concentrated sector. It's very uncentralized. It's private owned mostly, and it's very competitive. So it's difficult to point to one or several firms which are producing. They increasing the capacity quite significantly, and there are a lot of them. So it's very competitive environment.
Yeah. Thank you. I have some questions related to the exchange rate and reserves. I think this managed flexible exchange rate, if looking in the last years, I think around $35 or $36 billion has been used to manage the exchange rate. And if we assume something similar this year, I mean, where would the international reserves be at year end? You would say you might have mentioned this, but I would like to ask that anyhow.
It's actually if you look like from outside, it's looks like let's say unusual situation when the central bank is let's say selling in such large amounts of effects on the market. But in our case, it's mostly the outcome which we have at the same time quite large fiscal deficit. We have like this imbalance because government receives money from our international partners, but it sells them directly to us. So there is no government participation of the market. And we are like, we are getting these effects. And then government spends hryvnia on the local market, which it gets from us. So, of course, this market is unbalanced because of this fact. And in case, if we imagine the situation when government sells directly to the market, we could have completely different situation. That in this case, we were, let's say, will be buying from the market. So mostly like trying to prevent exchange rate from rapid appreciation. But because of this modality of how FX market works, we need to channel this money to meet the actually increased demand. So in terms of international, we are trying to, let's say, to separate this structural deficit on the market from what is driving like natural dynamics of exchange rate. So that's a $1 million secret how we define the structural deficit on the market, and which we are willing to cover. And the rest is like we are trying to just smooth the exchange rate dynamics. So that's two type of let's say interventions which we are doing. In terms of international reserves, currently the latest figure was for international reserves is 45.7, but we expect at the end of the year there will be 65 billions of USD in our reserves. So that's a combination of like international assistance that we will be getting. With current expectations is about 55 billions of USD for this year, and of course we will be selling some of these funds on the market. But like we are trying to preserve this constructive ambiguity in the market, so to keep it, let's say, unpredictable FX dynamics, exchange rate dynamics on the market, just not to have like additional demand. What I need to say is actually that before we moved to this managed flexibility, our participation in the market was about 70%, but since then FX market developed and is mostly like is more self-reliant. So currently our participation is about 50%. So the rest is banks are covering themselves.
Yeah, thank you. And if you will have this $65 billion at year end, how many months of critical imports would that cover roughly?
If I'm not mistaken, it's about 7 months of imports. But in terms of this, this adequacy ratio, it will be well above 100%.
Okay, very good. And then another question from my side. I mean, Ukraine has had for a long time a US dollar as a key currency. Is there or has there ever been any discussion to change that to euro, for example?
Yeah, of course there is a discussion. Actually, at some point we were starting asking ourselves why this US dollar, actually, while our main trading partner is EU. So it seems not really logical. And we have such a plan to move to euro as a reference currency, main reference currency. Of course, we need to be prepared for that, and we are like moving in this direction. That will not change dramatically how we are behaving on the FX market, but rather it will have like some more logic in how we are actually treating euro, and because of our EU aspirations, it seems quite logical.
Yeah, but there is no. It's difficult to say some timeline on this or when this could happen or.
There is no like date, we will, of course, we will announce it. If the decision will be made, we will announce it.
Yeah.
But currently, there is no calendar plan.
Okay, thank you. We have a new question in the chat, and I encourage everybody to put questions in the chat if you have somebody, and also to Marina. I cannot see if somebody raised their hands. I guess maybe only you can see that. So if somebody raised their hands, please interrupt me and let them ask the questions. But first, there's a question in the chat from Karen Lin. Do you plan to establish sector funds rebuilding, for example, for construction, infrastructure, hospitals, etc.? Do you plan to establish any funds for that?
It's mostly the job of the government. We could be involved in terms of to consult them because we have an expertise and probably at some point we can participate in this, but it's mostly question for the government how they plan to do it. So of course there is some drafts, but I don't have any particular details on that.
Okay, thank you. Do we have any hands, Marina? Or?
No, all questions in the chat.
Oh, okay, thank you. Maybe one more question from my side then. When it comes to the key interest rate, I mean, there was a board meeting recently where it was decided to keep it at 15%. At the same time, maybe it's just my own reflection, but when reading the statements afterwards, it was mentioned many times that, or several times, that MVU stands ready to raise the key policy rate if necessary to keep inflation expectations in check. I think that was mentioned a couple of times. How do you see the situation going forward here? I mean, what would be the main risk for the inflation drifting away? I mean, and how is this war in Iran playing a key role in this, or some comments about that could be interesting to hear.
Yeah, one of tasks of our key policy rate is actually to have while keep it sufficiently tight, we are at the same time we are decreasing the demand for effects, and that's one of the channels how we actually could influence not only these traditional channels of savings and consumption, like redistribution among them, but to have an effect on behavior of households, on their savings, and what is the distribution of between savings in local currency and foreign currency. We see currently that our deposits in local currency, and especially the government securities, there is high demand for them, and it currently works as it need to work. But of course, there is high uncertainty on the forecast horizon. We will be taking the next decision in July on key policy rate with the new macro forecast, and our task is to bring inflation to 5% on the policy horizon of 3 years. So if there will be sufficient pressure and key policy rate is an instrument, and if there will be a need to apply this instrument to achieve the 5% target, of course we will do it. But there is high uncertainty, things are changing quite frequently, and we need to see the new macro forecast and then decide on what to do with the key policy rate. So you will be having more information next Monday when the minutes of Monetary Policy Committee will be published, and you will see the distribution of of opinions among the MPC members and their arguments, and that will have I think many interesting details.
All right, thank you. Looking forward to that. Now suddenly we have a lot of questions. We also have a hand up. Roman Topolnitsky, Deutsche, please go ahead.
Thank you, Christian. Good morning, colleagues. Well, good afternoon already. Volodymyr, thank you for a very detailed presentation. My question in practical dimension related to FX liberalization. Our bank notes a rise in idle foreign currency balances held by exporters. We propose that NBU permits the use of these own foreign currency funds for the repayment of old foreign currency loan debts, well, at least partially. I believe that this action would not create significant pressure on the FX market. Thank you.
Yeah, it's difficult to say. I hear you. I need to say that we are trying to move as fast on this liberalization efforts as possible, given that we still controlling all the risks. So of course we could. We will continue with this liberalization, but given that we are controlling all the risk possible to the stability, price stability, and financial stability, and there is of course the room to move along all this liberalization. But of course, I could not tell about any details on the concrete measures. Of course, we will consider different options.
Thank you very much. You happy with that, Roman?
Yeah, thank you. Thank you for the answer.
Thank you. Now, I'm looking in the chat, starting from the bottom. There's one question from Vladislav, saying that you spoke about moving to euro as the reference currency is logical since the EU is the main trading partner. Will MBU move to euro as a reserve currency as well? How does MBU assess the political risk of abandoning US dollar as the reserve currency? Impact on the relationship with the key ally of Ukraine, the US. But your reserve currency, I mean, it's a mix, it's a basket of different currencies already, isn't it? Please answer. I should not try to answer the question. It's your question. Please go ahead.
Actually, there is increase in the share of the euro in reserves already. So, if I'm not mistaken, it's about increased from 7 to about 20%. But it's mainly the main reason is that we're getting most of the funds from in euros, and this and probably it will increase further. The share of the government debt, the main currency of this government debt is euro already. So that's like a natural development because we're getting most of the funds from EU. I don't think it's a political issue. It's rather economic issue, and which quite logical. And I don't think it has some geopolitical effects. It's just like pure economic logic.
Thank you. Then, first one question, will it be okay to distribute this presentation to the audience after the...
Yeah, sure.
Yeah, very good. So, Marina, please see to that all participants get a copy of a presentation afterwards. Because that is part of the questions from William. He wrote, there are a host of instruments being used by banks currently, some more desirable than others. Could you please walk through that slide again? And please send the deck to us participants. The deck you will receive. Any firm plans for further relaxation of FX capital controls?
There will be. Actually, we are discussing with our colleagues from IMF the next, let's say, timing and modality of the liberalization. I think we will go like in all dimensions. It's liberalization will be for different sectors. It's for like both for corporates and households. So we are working on that.
Thank you. We have one more. Well, one question there on capital controls that we typically receive from clients, and that is always or prospective clients, people that are not already here in Ukraine but looking to enter the market. They ask about these controls, and one question that comes up always is about dividends and the possibility to give dividends. And I know that you have liberalized that, so now it has a certain parameters and the 1 million euro equivalent per month, etc. Is there any discussion to liberalize that particular rules further? And then I'm thinking of particularly either increase this 1 million euro limit or making some progressive rate that companies that earn a lot of money can dividend a little bit more money than companies that earn a little bit less money, so to say.
Yeah, there is, I think there is a possibility actually to have this stimulative liberalization limit when you invest in Ukraine. You could easily within this limit, so you invested and you can have like possibility to withdraw money from the country within this limit. So there is more and more companies are using this possibility, and they are investing actually more than they withdraw money from the country. So and they are like accumulating these limits, and it's possible for them to actually operate normally without this. Within this limit. So of course we don't like capital controls where we needed to impose them, and it's always difficult to withdraw from this regime, because if you impose it in one day, and then you're like trying to normalize these restrictions, but it's always you need to take control over the risks.
Thank you very much. I think it's 1 o'clock, but maybe one more question that came at the end, and that is regarding to NPL. Could you please comment why it decreased so dramatically? The last question.
Yeah, because banks actually intensified their activities in getting rid of these NPLs. Actually, there was since the beginning of the year there was quite significant activity in this. All banks have a good progress in this, but one of the big state-owned banks actually had a quite significant progress in this, and that changed the graph completely. So yeah, so actually there is we think that banking sector is becoming much healthier now.
Yeah, I would agree with that. I mean, looking at the development since 2014 in the banking sector, it's quite amazing actually how that has improved. And today I think we have it's a small banking system in terms of assets, but it's a quite healthy banking system, which is very good to see. I will stop here. Thank you so much, Volodymyr, for participating here. Really appreciate it and answering our questions. We will distribute the presentation to all the participants. And yeah, thank you very much, and hope to see you next year again, similarly.
Thank you. Thank you.
Thank you.